On Friday, September 28th, the Norris Group proudly presents its 11th annual award-winning black tie event, I Survived Real Estate. An incredible lineup of industry experts will join Bruce Norris to discuss perplexing industry trends, head-scratching legislation, tech disruption, and opportunities emerging for real estate professionals. All proceeds from the event benefit Make-A-Wish and St. Jude Children's Research Hospital. This event is not possible without the generous help of the following platinum partners: the San Diego Creative Real Estate Investors Association, Invest Club, Inland Empire Real Estate Investment Club, Think Realty, Wilson Investment Properties, Coach Fullerton, First Lending Solutions, Property Radar, the Apartment Owners Association, MVT Productions, and Realty 411. Visit isurvivedrealestate.com for event information and see Amazon Prime or YouTube for past events.
Hey everybody, it's Aaron Norris and Bruce Norris in studio, and we are launching, as you probably already heard, I Survive Real Estate. We've got the new intro and outro starting this week, and leading up to September 28th, we'll be doing interviews. Actually, this year it's going to be a little bit different. We're not going to interview all the panelists before the event because we think we don't want to give away all of it, but we'll be interviewing some people that sort of support some of the questioning or sort of research up to the event. And we are sold out. We had such strong sponsor support. We actually sold out about 4 months and we'd never even officially launched. So you probably got the mailer if you're on our mailing list. You see who's there. So today we're going to sort of talk about some of the biggest questions we're getting, why we have the people on the panel that we do this year, all that kind of good stuff. So welcome, Dad.
Thank you.
Long-winded. So you're 11. When we started this 11 years ago, it's hard to believe it's 11 years, number one, but that we'd still be doing this.
Yeah, when we started, the title I Survived was really... that's where we were.
I think my standout comment that I remember from one of the first years, it might have been 2009, it was somebody from the Builders Association, and he wasn't talking a whole lot, and you asked him a question, and he said, I don't know, I'm hoping you guys have the answer, because they were struggling so much at the time. So it's interesting, every year we build a panel that's highly appropriate to the market and what's going on. So, and we've built some really fun relationships. So I know one of the radio shows that we're doing next, Thornburg, one of the all-time favorite guests that we've had over the year. He's always exciting.
very, very opinionated. You know what's exciting to me about the event is the panel over time has learned to trust each other.
Yeah.
And so they let their hair down and they really give honest comments, and the feedback is really honest too. It's not like a combat where somebody's trying to win. It's actually, you got the biggest brains in the industry kind of mulling it over in front of an audience. And I just think that's fantastic.
It's very rare that they get to be on a panel with people from different sectors as well. We all go to the events at the Mortgage Bankers Association or the National Association of Realtors, but you're typically on a mortgage panel or it's a broker panel. So to have them on stage and they're representing their skill set is quite exciting. So yeah, I love hearing, I've gotten some amazing feedback from the speakers over the years, just basically saying, this is one of my favorite events we get to attend every year. It's fun. There's no stupid PowerPoints that we have to worry about. And it's interesting. It's not provoking. So it's been fun to get. I mean, these are people. I remember the National Association of Realtors, Pat Combs, I think she was 2010. She told me that she spoke when she was chair of NAR 300 times that year that she was chair.
Oh my
president.
gosh.
I was like, what? It's so insane.
That's weekends off only.
Oh, no, I know. So, I mean, to get that kind of feedback is very special. And to have the repeats that love to come back like Doug Duncan. So let's dig in. Let's talk about why we chose this panel of 7 to join us. So, John Burns, I think we should get a royalty how much you and I refer his book.
He's just, I really respect him. I respect that he, even though he's very smart and has really stepped up, he wrote a book that he could have charged for the information that he charges his client. That was a gift to our industry. Honest to goodness, I look at that like that. He's got the ear of major players, hedge funds and national builders for a reason, One of the greatest comments I ever heard anybody in his position say is, I don't spend much time pat myself on the back for what I know. What keeps me up at night is what I don't know. I mean, if you have a consultant, that's sure be the attitude I would want him to have.
Yeah, if you're not familiar with John Burns, he's CEO of John Burns Real Estate Consulting. They have offices all over the country. He wrote the book Big Shifts Ahead, which I've been referring a lot lately because I get a lot of phone calls with people wanting to talk about moving their money out of California, and they're like, where? Mm-hmm. And it's such a personal decision. There's so many things that go into that. I'm like, have you read this book? And if they haven't, I'm like, you read that and then call me back and let's talk. Because I just think it's just an interesting insight and a data-driven way to think about where to go.
It's interesting. We had a meeting just 10 days ago. I went to Florida, met with a major builder and land guy and property manager. And what was the topic? His book.
Really?
Yeah. The builder, he said, I don't know if you know this guy named John Burns. I said, yeah, I'm actually pretty familiar with him. I told him about the event. And he said, have you read that book, Big Shifts Ahead? I said, yeah, I read it one day, yellow marked the heck out of it. He shook his head. But it was kind of interesting because it gave us a commonality of, okay, I kind of got liked more because of that. No kidding.
How funny.
Well, but it made sense to study that. And for him too, where are you going to build? Why would you why would you think Florida, let's say, is going to do well? It's, going to get muscle migration of people, et cetera. So it's a kind of a key factor. And I love the way that book separated the generations into shorter time frames.
Yeah.
That was very helpful because you don't have a lot in common with a 18 or 20 year spread. When it's a 10-year spread, you really do.
Right.
And the differences can emerge because it's, they really are different and what they got raised with. Sandy's youngest grandkids now, she has a grandson that's about a year, mm-hmm. and he's walking around with an iPad. Going beep, beep, beep.
Yep. And then once they can't talk, but they can find videos themselves on the phone.
Yeah.
And then wait till they're 4 and they're talking to Alexa. It's a trip. This is the generation that's growing up with no walls. So this is the zero interface generation. We won't be looking at screens.
Well, one of the things that you were talking about, and we were talking to people that were really knocking it out of the park, and the ability for them to use technology that's honing in on the likelihood of the next decision by the homeowner.
Yes, I'm working on an interview. Instead of interviewing Mark Leswing, who's the vice president of, I think he's the technology officer for the National Association of Realtors. He does research on things like blockchain, artificial intelligence. I don't want to interview him beforehand because he's got some exciting things to say, but I do want to interview the CEO of Offers. So I'm working on that right now. But Offers provides data to realtors with they say they have a 70% certainty they know when a seller is going to sell in the next year. So they're looking at over 30 different data points, everything from public record to how they're visiting websites and searching, and using artificial intelligence, being able to say that person. There are already some real estate investors that are using that technology as well. So instead of marketing to a general list of non-owner occupants, what if you could whittle that down to by, 90% and market the heck out of the 10 and be creative and door knock and do all those things. So it's just becoming a lot more complicated and intentional.
And the competition, if you're not keeping up.
Yeah.
Wow.
Yeah,
if you're
for sure.
Like a realtor just thinking, I'll just go around and door knock or whatever.
Oh, I know. It's ridiculous. Well, we covered John. I briefly mentioned Mark Leswing. He's flying out from Chicago to be part of the panel. Since we're sort of already on technology, Zillow did end up replacing their panelist. We've had a shakeup. It's going to be Marnie Blanco, and she's the executive director of industry relations for Dotloop. I'm going to actually see if we can get Nick Bailey on the show. So he was the Zillow representative 2 years ago,
right,
and did one of the most fascinating moves in the industry that I've seen. He moved to Century 21. So to move from Zillow
to Century 21,
one of the oldest
names, yeah.
He's rebranding them, and it's brilliant. And then if you haven't had a chance, Inman Connect had their conference, I think, within the last 60 days anyway. And there was an interview between Gary Keller and Inman. And Gary breaks down sort of where our industry is at. Like, the realtor is dead, but our industry being 100% automated is also just not likely, but he talks about the in-between, a tech-enabled agent or an agent enabling tech, and these two different categories and who lives there. And Gary sort of really leans into Inman, and he's very unhappy. He's like, you're basically in bed with all these technology companies when they're not supporting our industry. And he said something, he's like, he's spending $1 billion in technology. So I would love to get Nick on the phone and say, hey, you come from Zillow. How are you sort of recreating and refreshing this brand, and how much are you leaning into technology? So having Marnie there, her background is in .loop. This is sort of like an online platform, and Zillow made no qualms about it. They're focused on the top 10 to 15% of realtors and creating a platform for them, soup to nuts, to where you can do everything within that platform. So I believe that is .loop. This just happened, so I'll find out.
Now, including the buying of homes.
Oh, the last 2 years, they've also said they were not going to get into the home buying. Well, they join Open Door, a lot of these other companies that are buying directly from sellers. And, Zillow getting into that game is fascinating because they already have that technology and the AI to say that person is doing a lot of searching. They're looking to move, and let's offer them. So they know before anybody else.
That's just scary stuff.
Yeah.
But also those top agents that you're talking about, they're getting those leads.
Correct.
So,
or they're getting the property that Zillow buys. Maybe they don't even care. They're literally rolling out the CarMax model. So their goal is not heavy fixers, from what I understand. Right. I got to talk to Open Door about that. They're like, yeah, we don't want to do that. And I've heard Zillow has reached out to some larger real estate investment firms, sort of talking to them about, yeah, we don't want to do hoarder houses. So they're looking for an exit strategy there as well. So who knows? Maybe they do end up becoming a friend of real estate investors, but I think they're going to make the idea, sort of the CarMax, the used cars, very similar to real estate. It's just going to be easier. They're the brand name. They're trusted. They're going to sell it all cash. As long as it's not a heavy fixer, they'll probably dejunk it and give it to the realtor to list and sell.
Yep.
So I think they're wanting a 7 or 8% discount for that.
Wow.
So I'm sure we'll hear a lot more about that. So Doug Duncan is back, one of our favorite economists. Super cool guy, and I'm always happy he's willing to come out. He's the most candid economist I think besides Thornburg. Thornburg's pretty candid. But in his position, it's very unusual to have somebody in his position inside a federal government to be so forthcoming.
It's just we've interviewed other people in those, not exactly in his position, but usually there's a process. Okay, submit questions.
Oh, yeah.
And they line out the questions they don't want me to ask.
Yeah.
And we've never had to do that with Doug.
Government entities are tricky. They have to be very aware. They can't be political. So he's really given us a straight every time he's been on. I appreciate that.
Yeah. And I think it's great that the trust, I think, the very first one we did, even our clients, our investor base, didn't even know really what they were coming for. Is this a seminar? No, it's different.
It's a charity. What? I have to dress up.
And it's evolved into something that's you got to go to.
Yeah.
Where you're sold out before you even say it's on.
That was new this year. That's never happened. The sponsor support was so unreal. That was pretty cool. So.
And what happens too is that people like Doug, David Kittle, the word is out from them. So when you call and say, okay, well, David can't make it. Well, David's like, yeah, you got to go to this. He's referring us people in the sense of saying, yeah, you clear your calendar, go to that. And Doug has done sometimes the event, stayed up till 1 a.m. after the fact, and then had to leave at 4 a.m. to a flight to go to another speaking thing across the country. So, it's just, we really appreciate him. And, you think about how much brain power is on these panels. It's a great luxury for me. Whenever I interview people, I'm almost 100% of the time I know the answer to the question I'm asking. So I have a back door, and I can easily just say, and go kind of provide the answer and go on to the next one. With this panel, and for that night, I get to ask questions I don't know the answers to. Yeah. And it's fun because I can think about some pretty good things I'd like to know and their opinion of how the next recession plays out, that type of thing. Doug has talked about lower interest rates coming in the next. I want to know if he's changed, because you know what? We haven't had this recession show up. We now have a GDP growth, and I just asked Dr. Thornburg, so when's the next recession? Not sure. What's the cause? Don't know. Okay. Well, so if that's the case, and that's important, in this event, you'll have more than just one brain on there. If the collective thought is, I don't really know that there's going to be a recession that's imminent, then California has a different ending.
Yeah.
And we have to talk about that because, okay, and that's, we're thinking very, very much about an alternative ending. So we can say, okay, if we're going to just go until we're done again to the peak, then we have to figure out what's the exit, is there an exit, and what's the next thing that's going to happen for California, So this panel was important to me because I'd like to see what they think of. We're already at a peak price for the California, for one. I'd like to know how they feel like the next recession will impact real estate, because real estate really drove the last recession because of the loan stuff. This time, we might be the benefactor of a recession because of the lowering of interest rates. So it's very interesting.
Right. Okay. Well, we've got Gary Acosta back. This is his second year. He's with a co-founder of the Mortgage Collaborative, but he's also the CEO of the National Association of Hispanic Real Estate Professionals. So he comes with such a great knowledge of just so many different industries. He's consulting for the CFPB. He's, been on committees helping them shape that and changes. So, at least in the Inland Empire here, we're over 50% Hispanic in our area. So they're one of the largest growing sectors that we have to focus on. And the way the Hispanic community buys and sells is a little bit different. It'll be interesting to hear a little bit more about what he sees as growth there. They have an initiative called, I think it's called One Wealth, where they're really focusing on the Hispanic family and to get them into home ownership. And, does that change what people are building? Here in California, is multi-generational housing still a thing, or I don't know. So I'm excited to have him back from the mortgage side as well as the NAREP side.
Yeah, the Mortgage Collaborative, basically, David Kittle's a part of that as well, right? A founder of it?
Yep, and Deborah Still, who's been on their panel before.
Okay, so that's the top of the heap. Yep. And, they've helped the industry assimilate into the documents and, make it through the maze and, get to the finish line without too much damage. It'll be very interesting to see what their take is on the next round of easing of the ability to get a loan, because that also impacts where prices will go and the danger of a downturn. If you have 2 years where people can get in with less and less qualification and more tricky programs and less down and all that, okay,
Man, I sure wish they would have done this 7 years ago, but okay.
Well, but see, that is not how it works, because you're real conservative, and then all of a sudden at the very end of it, I didn't think we'd get there this time. I didn't think we'd get to say, okay, let's let everybody in. Some of the programs are probably never going to come back, but the ones that are coming back, maybe they're not in sufficient quantity to cause damage. But if you get in with nothing down, and
they're not qualifying you. I just don't understand in Dodd-Frank. We're so regulated now, and the amount of data that we have to provide. If the CFPB doesn't take that data and turn it into action, I give up.
Yeah, that's since we've been licensed now and go through audits and
when you're dealing with consumers, the amount of data as a lender that you have to provide the federal government now is insane.
Yeah.
Race,
expensive.
Ethnicity, location, price, house, how much down. I forget how many different data points, but it's a lot.
It's a lot.
All right, we've got Sean O'Toole back, Property Radar. Has he been on the panel every year? Almost every year. I just love to listen to Sean tell me what's next. Yeah, I'm excited I know he loves the 3D space, so I'm interested to talk to him about that. The last time he brought up how he thought mortgage lending had to change, and the mortgage industry is already struggling a little bit. So you've got a lot of people, refis are not as plentiful. So they said it last year too. They're expecting a lot of people to leave the industry just because there's not as much business. But I want to explore what he's thinking, because it's not that. He just thinks it needs to change completely.
I like the fact that he's so into the 3D that, he really has a take on the impact on real estate. And I'm sure he's up on the newest house and, what if in fact they can build a 3D printed house for much less than any other way? That would be scary.
And I want to talk about the political ramifications of that too.
Yeah.
So it's jobs. So don't think the unions aren't going to be all over that. It's environmental.
Well, I think, the city might say, wow, look at that. To bring that up to a standard price, we could just charge a lot of money for those permits.
Right. If the unions aren't going to make it, we are. Yeah. It's, we're in California. So I just met with the city of Riverside, interviewing them on an article I'm writing, and I wish I would have brought this up. We talked more about ADUs, but if you're able to print an ADU in the backyard in 24 hours and get it up and running and have a little Airbnb, vacation rental, or granny flat in the back, within a week, it's pretty amazing.
I don't know that we're but a few years away from that being a reality.
Oh, I agree. So, last one, we've got Eddie Wilson. He is Affinity Worldwide CEO and owner of Think Realty. It's formerly the rebranded version of Personal Real Estate Magazine. He's got a media background. Affinity Worldwide owns an insurance. I think they own something like 70 companies, but one of them being an insurance company, one of them being the Association of Private Lenders. So he's sort of an interesting nationwide voice for real estate investors and sort of what's going on nationwide and what people are worried about.
He's very active in the charity space as
well. He does some very interesting things in the charity space. So I'm excited about this panel this year. If you don't have a ticket, check out the sponsors. There's several that might have, especially the real estate investor clubs. Check in with your local real estate investor club and see if they have got a seat at their table. If not, just give us a call. We'll have a waiting list. Invariably, some people, we've had entire tables not show up at last minute. So we'd love to have you there live. We're on Amazon Prime, the 2017. So if you missed last year, if you say, hey, Alexa, of course, I probably just set off everybody's Alexa, but find Bruce Norris on Amazon Video. So you come up our brunch, and from there you can sort of whittle around and find I Survive Real Estate. But we're getting there.
I can't even barely comprehend what you just said. So
well,
glad you're in charge of that.
The other stuff we have coming up, Cashing In on a Boom, September 8th. It's sort of sneaking up. I've just been nose to the grind working on the content. It's completely new. We're focusing on creating inventory, so adding square footage, accessory dwelling units, mobile homes in this market, how to add value when it's hard to find it.
What's great about that is that content goes on the website.
Yeah, we'll be taping it, and then it'll end up, we're expanding our buying systems course, and so this is part of that process. We're adding, I think, 2 new chapters and renovating 2.
What's great about that is, whenever you have seminar books, when you buy them, it's a finite package, and the charts get old, and the market changes, and that document can't. Mm-hmm. Having it being online, it's a fluid educational piece that constantly changes with the market, and people have expertises that I don't, and we're able to add those every time, now, mm-hmm. and that just makes it very valuable.
It's good stuff, and it's I'm excited. All the partners will start releasing that information as the chapters get complete. We want to make sure we get that through the pipeline, but I think it's going to be exciting, and we only have room for 150. We're going to sell out. And then the Cutting Edge Financial Tactics Brunch, if you don't know what that is, you can also find it on Amazon Prime, and I'm really proud of what we created last year, and this year is going to be harder because people are like, can we get away from the basics? And actually, with the panel, we've got an attorney, we've got a CPA, we've got Karin Hall with UDirect IRA, and then you beating up different things from reverse 1031 exchanges to entity selection in the Trump era and the tax ramifications of those decisions. So it's going to be really beefy this year, and it's only a limited audience. So
yeah, it's not a beginner class.
No, not a beginner class. So you'll definitely want to watch the Amazon Prime. It's free if you're an Amazon member. So, well, look forward to the interviews, and we'll see you in the next radio show.
All right, thanks, sir.
The Norris Group would like to thank its gold sponsors for supporting I Survived Real Estate. In a Day Development, Inland Valley Association of Realtors, Jennifer Buys Houses, Keystone CPA, LA South RIA, Las Brisas Escrow, Lawyers Title, Michael Ryan and Associates, New Western, NorCal RIA, NSD REI, Orange County Real Estate Investors, The Outspoken Investor, Pacific Premier Bank, Pasadena Phoebe, Pilot Limousine, SJREI, Spinnaker Loans, South OC RIA, UDirect IRA Services, White House Catering. See iSurvivedRealestate.com for event information.